Hi friends, this is Rachel Olson, and we're diving into the One Big Beautiful Bill Act, a massive piece of legislation signed into law on July 4th. It's packed with changes that could affect your wallet, whether you're an individual taxpayer or a business owner. Let's break it down. Before we start, let's talk about why this was so important. We had massive tax reform 9 years ago with the 2017 Tax Cuts and Jobs Act, and many of those provisions, including lower individual tax rates, doubling of the standard deduction, and small business QBI deduction, were all set to expire this year and go away. So first up, let's talk about how this bill impacts individual taxpayers because that applies to everyone. The individual income tax rates that we've been enjoying aren't going away anytime soon. The bill makes the current rates a permanent tax cut. Without this, we were going to see individual tax rates go up 2 to 3% at the end of this year. So if you were in the 12% tax bracket, you would have gone to the 15% tax bracket, but not anymore. We'll be keeping the current tax rates in place permanently. The standard deduction was also doubled 9 years ago and was set to expire this year. But this has been maintained and made permanent. So in 2026, we'll see a standard deduction of $32,000 for those filing married and $16,000 for those filing single. The child tax credit is also going to be getting a boost. Families with children will see an increase from $2,000 to $2,200 per kiddo. There's a phase out though for high income earners, married $400,000 or single $200,000. It phases out and gets less and less if your income is above that. But if you're under that, you'll get the full credit of $2,200 per kiddo. And this is a big deal because this is a tax credit and not a deduction. So it doesn't reduce your taxable income, but it gives you a dollar for dollar off your tax bill. Seniors are also getting a brand new $6,000 deduction on top of already existing deductions. A new deduction of $6,000 is available and it's per person. So if you file married filing jointly and you're both over 65, your tax return will have a $12,000 deduction for this. For those of you with high state and local income tax, we've had a major increase in the deduction of state and local income taxes from $10,000 that we currently see as the cap up to $40,000. However, in 2030, that will drop back down to the $10,000 cap. Tips are also getting a $25,000 deduction, but they do have to be voluntary. And in an industry where tips are customary, overtime pay also gets a deduction now. $12,500 single, $25,000 married, but also again, there's phase outs. And this is only from 2025 to 2028. We've also got several business tax changes. The QBI deduction has been made permanent at 20%. This was set to expire and go away next year, so this is a huge win. 1099A, also known as bonus depreciation, was going to be going away. We've got 100% bonus depreciation that's been made permanent and also applies to 2025. Opportunity zones are also staying and made permanent in this bill. This bill includes a lot of changes that impact taxes for you as an individual and you as a business owner. If you need help looking at your tax strategy and making sure you've got the right strategy in place to lower your taxes this year and the following year, connect with us over at Factor. We'd love to be the partner in your business and help you make sure that you're maximizing all of these new rules.